Hello and welcome. So firstly I'd like to thank everyone that watched the first video, and to the 5 new subscribers, thanks very much. It's good to get a nice bit of feedback as well from Debbie, who we thank you, so thank you to you as well. Right, so today I want to go through a couple of good long-term dividend stocks. So the way a dividend works is, a company makes money and they pay out to their shareholders, which is us. So basically you can get your money for nothing and your percentage for free, which is kind of cool. So the first one we've got here is Base Resources. So they are a mining company from Australia that's based over in Africa, and they do a lot of sort of mineral sands type products. So the good thing about these guys is it's fairly stable, as you can see on the shares chart, apart from obviously when everything happened in the world. But if you go back, it's fairly stable all the way across, and also the share price is quite nice and cheap, and good price to earnings ratio as well, so it's just consistent. And these guys have been going for a while, and the best part is a gross dividend of 20%. Now that works out at about, and they pay out usually twice a year or once a year, so that's what, 3 cents per share. And because they're nice and cheap, you can get 10 shares, 1100 shares or something like that. So if we look at their website, they've been going for quite a long time. We've also got their fact sheet here, so I've included a link to all this in the description below, so you can do your own research and make your own decisions as well. So basically it looks pretty good, goes through all these sort of what mineral sands are, their products and uses. You can see it's mainly sort of commercial based, which is always a good thing, keeps it going. And the next one I'll just nip across. So the next one is a Global X FinTech ETF. So FinTech is sort of like new age financial ways. So there's a couple of online banks and stuff like that aren't they operate as a bank, but they're not as a registered bank, and this is getting quite popular, especially over in England and a few other places, like with Starling Bank, which is a major online banking, and I think they've got over 5 or 6 million customers or something now, so it's getting quite big. So this is obviously, they've had a wee downturn with the share market the way it is, so it's good that it's nice and down compared to the $50 it was before, so that's always a good sign that it can go up. As you can see, I've bought a little bit just there, which is always good to buy when it's nice and low, and that's pretty much in line with where it did after all the sickness that came across the world. And the good thing about these guys is they're paying a gross dividend of about 9.3%, so these are quite high, which is good, because most dividends, I know there's a few YouTube videos about dividend stocks and they're like, 2 or 3%. It's like, yeah, well, 9% and 20%, those sound a lot better. So last time they paid out about $2.16, so every December you get a nice little payout, which is good. And we can go to their website. So this is their sort of Global X website for the persons that are running it, and you can see high growth potential, all this sort of, all the positive, marketing side of things, which we somewhat believe. But as we go down, you can see that they've got just a consistent, obviously first when they got funded at the beginning they lost a wee bit, but as they've been going, it's been so steady and growing over the time. And their holdings, it's all pretty transparent on what they're holding, which is always a good sign that you're not just investing in a shell company that's only got a few things and they don't really want to tell you what's going on. It tells you a breakdown of all the sectors and stuff that they're investing in, all the countries, so that's quite good. So I've included a link down there before. So if I have a look over this trading view, we'll go over a YouTube video later with actually how to get this down here. So this actually shows you your volumes, and basically when there's a green dot, it shows that there's volume going into that stock and that it's likely to rise over the next 4 hours. Then the red dot usually means that it's selling off, so the volume is disappearing and the hype's wearing off, so to speak. So it's a really good indicator for just starting out. I'll just figure out how I can do a video for it, and then we'll carry on. So Base Resources, so you can see from a long time, because you can go right back all the way. It's a very flat line. Obviously it's increased a wee bit now because we're starting to go into a commodity type cycle, but nice and flat and nice and cheap to start off with as well. And if we go down to, where are we? FinTech, there we go. So it's gone up 3% last night, which is kind of a good thing. It's had a bit of a drop, obviously, with the share market coming down, but it's good because it's in line with its bottom there. So, you know, hopefully that indicates that that's a bit of resistance there, and it will only go up. So as you can see, it sort of goes up, peaks, comes down. So it's quite varied, but at its peak it was about $53 a share. So, you know, give it a couple of years. It's sort of a long-term holding stock. Cool. So that's us for today. If you enjoyed the video, like and subscribe. Leave a comment down on anything else you'd like to do as well, like to see, and I can definitely put a video together for that. Awesome. Cheers, guys.